Alrighty, Walmart went ahead and reported some earnings yesterday in the morning. We're a little bit late to get to it, but obviously we had to take a look at Groupon because I was working yesterday and I got home and Groupon had just reported earnings. And, well, I think the Groupon earnings were a little bit more pressing because they were horrific. Meanwhile, Walmart comes out here. This is the second time making this video, by the way, because I kid you not, I was so tired yesterday I did fall asleep while making the video. This time, I'm good. We're freshly woken up. We're feeling great. So, yesterday, Walmart went up 1% after the earnings results, 1.5%. Nothing crazy. There wasn't a crazy reaction, and that's just typically what you'll expect from a company like Walmart. I mean, this is a it's a stagnant company, is it fair to say? The company does not move that much at all. You can't expect that much movement out of Walmart, regardless of the situation, unless they reported something absolutely horrific. So, all things considered, nothing too crazy happened. If you're looking at a company like Walmart, though, which I think it's important to look at, historically, this is a company that pretty much, I think, sets the pace for where the market's at in terms of PE ratios. So I think it's slightly a little overvalued right now, to a wee bit, because they're trading right now at a PE ratio of around 22. And, historically, you're looking for a PE ratio between 15 and 20 for the market as far as fair valuation. It really depends on how the economy is doing. Right now, our economy's still rocking it, so I understand the increased valuation a little bit. But overall, I don't know how much more room to run up there is, just because this, again, it's a boring stock, all things considered. All things considered, boring stock. What can I say? What more can I say? Let's look at these earnings now, though. So they went ahead and put up a non-GAAP EPS of $1.38, which missed by 6 cents, which is very rare. Walmart very rarely misses on their EPS goals. Typically, I think they've historically got about 80 to 90% beats on their predictions, or at least they meet expectations 80 or 90% of the time. So this is a very rare miss for them. But on a GAAP standpoint, which is really what I find more important, they beat by 2 cents, $1.45 a share. Pretty cool. Revenue of $141.7 billion. That is a lot of freaking money, up 2.1% year over year. Nothing too exciting about that, but I think it kind of is because, typically with a company like Walmart, you're expecting a 1% growth. When you're making that much money, you don't expect high growth. 2% isn't necessarily high, but all things considered, it is higher than it has been, and that I think is why they're having that increased valuation right now. So, all things considered, I think it's not bad as far as that's concerned. Let's look at some more stuff here. They also went ahead and rose their dividend, which they've been raising their dividend since 1974 when they started paying dividend out. So, nothing unexpected here. Just rose it to 1 cent per share each, which is what they've been doing consistently. Nothing too crazy there. And obviously they pay quarterly as well, even though it gave an annual amount there, but they split it into quarters. They just announced the full years all at once. But so Walmart falls after comp sales rose 1.9% in quarter four to miss the consensus estimate of 2.4%. And again, Q4 is a big year for them, or a big quarter for them, because it's it's the quarter of the holidays. It's where you got all the major holidays going on. So you're expecting very good growth. And they didn't necessarily see very good. They saw some good growth, but let's see. Transactions were up 1%, and average ticket was 0.9% higher. Comp sales were 0.8% for Sam's Club, and that was against a consensus of 1.2%, so a little bit lower on their perspective as well. Total sales of Walmart International was up 2.3%. And Doug McMillon here says, we started and finished the quarter with momentum, while sales leading up to Christmas in our U.S. stores were a little softer than expected. So over the December period, it was a little bit lesser than they expected. They had a really good Black Friday, and they had a really good just January as well. But and a lot of that really can relate to, I think, weather in some aspects. So it just depends. I mean, if you don't have necessarily as bad a weather, you're going to have a higher sales month in January than previous years in which it may have been bad weather. I do appreciate Doug here for saying Christmas instead of holiday, leading up to holiday. It wouldn't surprise me if someone said that. That's all I'm telling you. So for guidance, Walmart sees 2021 comp sales growth of at least 3% and EPS of $5.00. Okay. To $5.15 versus the consensus of $5.22. Not that exciting. They're not meeting the consensus, but they say there's no impact from the coronavirus being factored in. Debatable if they are. Who knows? Let's take another look here where Oppenheimer here, an analyst, says that they are staying at just a market perform rating with a target of 125, and the average sell side target is 130 or 128. Am I still tired? I don't know. So here you have CFRA analyst Garrett Nelson saying that he gives it a buy rating with a price target of 130, but that is lowering it from 135, and they're accounting for a little bit less in terms of that EPS that they guided. So makes plenty of sense. Not that much of a drop there. Let's get into these slides and see what they have to offer for me. So, obviously for the full year guidance, you see around 3% net growth in sales. For comp sales growth, they're expecting 2.5% from Walmart and a 3% from Sam's Club. U.S. e-commerce, they want 30% growth. International, they're expecting 4% in constant currency. Consolidated expense leverage, around 20 basis points. We have an effective tax rate they're looking for 25 to 26% in an effective tax rate. Consolidated operating income, didn't mean to skip you. They're expecting similar to EPS growth and Walmart U.S. Operating income growth near the upper end of the growth rate range. EPS we saw about, and capital expenditures around $11 billion with a focus on store remodels, customer initiatives, and e-commerce, and technology and supply chain. And as I mentioned before, you'll see this a lot. Expenses and I think profit goes down as companies tend to focus on the online aspect of it. It's just a more costly business, so nothing's too crazy regarding that. There's a lot more expenses that go into, operating an e-commerce business. So overall, they changed sales quarter over quarter 2.1%. Year over year for the whole year, they went up 1.9%. For the whole year, they went ahead and went up 2.7% in total revenue in constant currency. Net sales rose 1.9%. Membership and other income was down 0.9%. Operating income was down 6.3%. Adjusted operating income down 1.9%. Interest expense up 13.2%. They increased other gains and losses, which here is a loss, by 123.4%. So that's really where you see this decrease in operating income, no doubt. No doubt about it, because that accounts for, obviously more than enough of that operating income loss. And that is, quite a big jump over what they had last year. And EPS actually was not bad at all. Good change in EPS, 129.6% difference. And then that's cool. Quarter over quarter, you see 14.2% change. Okay, fine. I get it. Gross profit rate was down 47 basis points. For the year, it was 24.1%. Effective tax rate was 24.4%. So see, this year they're guiding for a little bit higher of an effective tax rate. So your return on assets, you saw 6.7% growth. Cool stuff. Cool stuff. Net receivables of $6 billion. Inventories, they've got $44 billion worth of inventory, which is actually up overall. 166 million more than they had last year. Accounts payable, they have quite a bit more accounts payable. Not really. Actually, they don't at all. I'm just kidding. Accounts payable is actually down 0.2%, so good for them. Operating cash flow, a little bit less overall. Less being versus the prior year to date was $2.5 billion less in cash. Am I reading this right? I am reading it right. I thought I was going crazy. And for capital expenditures, they had 361 million more in terms of, capital expenditures, which makes some sense there. Dividends overall, it looks like they paid less in terms of dividend, which isn't necessarily true because they really rose overall year to date. But maybe there were less shares paying out. We'll see how that looks. So for Walmart US, which again, nothing super crazy, but you do see overall a decrease in operating income by 12.7%. I don't necessarily look too much into the different segments here. Besides, if you want to look at just the categories, I do like looking at that. Grocery was low single digit growth, health and wellness mid single digit, and general merchandise actually had a slight decrease. So that's an interesting one for Walmart, especially in a quarter that is focused on general merchandise, which is, the fourth quarter of the year. It's over the Christmas period. That's when general merchandise is the focus. So definitely interesting thing to see. Walmart International, again, I don't care too much about Walmart International. We'll look at the Sam's Club side because that's more of an important subsidiary than, other stuff here. Net sales rose. Typically, you're looking at without fuel, 0.9% year over year. And gross profit rate actually decreased just barely slightly. Membership income rose 2.5%. And operating income actually rose 7.4% on the side of Sam's Club. Good for them. E-commerce sales increased 33%. One thing important, obviously they say tobacco negatively affected comp sales by approximately 30 basis points. It will be a factor in this upcoming year as a majority of Sam's Clubs are going to be stopping the sale of tobacco. But that overall will reduce, obviously, labor costs and will reduce the amount of loss because there's a lot of loss that comes with tobacco. Even though it's a controlled area, there's a lot of loss that comes with it. So interesting to see there. From their fresh freezer cooler, which is their focus of the business, they saw mid-single digit growth. Grocery and beverage, mid-single digit. Consumables, mid-single digit growth. Home and apparel, low single digit. TEO, low single digit, and health and wellness, a mid-single digit. Mobile phones performed well. One note as far as why mobile performed well, Sam's Club did go to a third party, so they're not actually staffing that area with their own associates. They do have third parties that are over it now, so there's a third-party company that actually sells phones for them, and since then, sales have grown pretty significantly on mobile, so that's a factor there if you're looking at it. So obviously we love stuff as far as total assets here. You see overall 2020 they're expecting, look at this rise in total assets. You got to love it. Accounts payable, nothing significant change there. All things considered, I'm pretty excited about this. I don't think there's anything too crazy going on here. You see free cash flow decreasing $1.5 billion. Obviously, we don't love it. But a lot more net cash used in investment activities. Other than that, that's really all we got here. There's nothing else super exciting here. You see all these charts, you're like, what the crap's going on? There's nothing super exciting. That's what I got for Walmart earnings, and I hope you enjoy.